There's a room in Washington, D.C. where decisions get made that most Americans never hear about until it's too late. February 4th, 2026 was one of those days. While social media was busy arguing about whatever distraction was trending, something happened at the State Department that could fundamentally alter the wealth of millions of people. Not in 5 years, not eventually, right now. And the crazy part, almost nobody noticed. By the time you finish this video, you're going to understand why the next 12 months could create more wealth transfer in the silver market than the last 50 years combined. And I'm not talking about some wild speculation or conspiracy theory. I'm talking about what the second most powerful person in America announced on camera in front of representatives from over 50 nations. So if you've got silver sitting in a safe somewhere, if you've been stacking eagles and maples while your friends called you paranoid, if you bought physical metal when everyone else was chasing meme stocks, what I'm about to show you is going to make your heart race, because the United States government just told the world they want your metal to be worth more, not less, more. Let me paint you a picture of what actually happened. The Vice President, J.D. Vance, stood at a podium surrounded by flags from dozens of countries, cameras rolling, official transcripts being recorded. This wasn't some off-the-cuff remark at a rally. This was a formal ministerial meeting. And he said 5 words that should have broken the internet but somehow got buried under the noise. We will establish price floors. Not might establish, not considering establishing. Will establish, those 2 words. Will establish, they're not suggestion language, that's commitment language, that's policy language. And he wasn't talking about wheat or corn or oil. He was talking about critical minerals. And as of November 2025, silver is officially on that list. Let that sink in for a second. Your stack, that tube of silver eagles you bought 3 years ago when spot was $31 and everyone told you it was a waste of money, the government of the United States of America just announced to the world that they're going to use the full force of American trade policy to make sure that metal doesn't drop below a certain price. Now, before your brain starts screaming that this sounds too good to be true, let me show you exactly how this works. Because the mechanism matters. Vance didn't say the government was going to buy silver. He didn't say they were going to manipulate markets directly. He said tariffs, adjustable tariffs. Here's what that means in plain English. If China or any other country tries to flood the global market with cheap silver to crash the price and destroy American mining companies, the United States will slap a tariff on that imported silver. The tariff brings the effective price back up to whatever the reference floor is. So even if China sells silver at $50 an ounce, by the time that silver crosses into American borders, the tariff makes it cost whatever the floor price is. Maybe 70, maybe 90, maybe higher. The market can't undercut the floor because the tariff adjusts to maintain it. This isn't theory. This is what Vance described word for word at the State Department. He said, and I'm quoting directly here, "These reference prices will operate as a floor maintained through adjustable tariffs to uphold pricing integrity." Pricing integrity, think about those words. The Vice President just told the world that the United States believes the current pricing mechanism for critical minerals is broken, and silver is on that list. He went further. He said, "We want to eliminate that problem of people flooding into our markets with cheap critical minerals to undercut our domestic manufacturers, because we know, of course, that as soon as they have undercut our domestic makers, they leave the market, and the people who undercut them then jack up the price to a completely unfair level." Read between the lines. He's describing predatory pricing. Dump cheap product, kill competition, then monopolize supply and jack up prices. That's exactly what China has done with rare earths, with steel, with solar panels. And Vance just said the United States isn't going to let it happen with silver. But here's where it gets really interesting. He didn't stop at tariffs. He announced that the United States is building a trading bloc, an alliance of countries that will guarantee access to critical minerals at stable prices. Secretary of the Interior Doug Burgum confirmed that 30 countries have already expressed interest in joining. 30 countries. Think about what that means. If the United States builds a trading bloc with 30 allied nations, and those nations include the world's largest silver producers, which they almost certainly do, that means the majority of global silver supply would operate inside a system with price floors. Everyone outside the bloc, primarily China, faces tariffs if they try to sell below the floor. This is economic architecture. This is the kind of thing that gets written about in history books decades later, and it happened 3 days ago. Now I need to take you back 1 week, because if you were paying attention to financial news on January 30th, you saw headlines that made it sound like the exact opposite was happening. Reuters reported that the Trump administration was backing away from price floors. The headline said individual company deals were dead. Australian mining stocks dropped. Silver investors panicked. Message boards lit up with people saying the whole thing was falling apart. I watched it happen in real time. People were selling physical metal because they thought the price floor idea was over. That narrative was completely wrong. What died on January 30th wasn't price floors. It was one approach to price floors. The original idea was to negotiate individual deals with individual companies one at a time. Company A gets a guaranteed price for copper. Company B gets a deal for lithium, one by one, slow, expensive, politically complicated. That approach wasn't scalable. It would have taken years. What Vance announced on February 4th is completely different. It's systemic. Tariffs applied across entire commodity categories through a multilateral trading bloc. No individual negotiations, no congressional appropriations for every single deal. The president already has the authority to impose tariffs under Section 232, which Trump signed on January 14th, declaring critical mineral imports a threat to national security. So the mechanism is already in place, the authority is already granted, the only thing left is setting the reference price, and that's coming. The media said price floors were dead, but what actually died was a small, clunky version of the idea. What was born 3 days ago is a much bigger, much more powerful version, and the market hasn't figured this out yet. When it does, when the hedge funds and the algorithmic traders and the leveraged specs realize what just happened, the move is going to be violent. But before we get to price targets, you need to understand why this is happening at all, because the why tells you everything about where this goes next. On November 7th, 2025, the United States Geological Survey did something unprecedented. They added silver to the official critical minerals list. Silver had never been on that list. Not during World War II, when the Manhattan Project borrowed 430 million ounces of silver from the Treasury to build electrical components for the atomic bomb. Not during the Cold War, not during any previous crisis in American history, but it's on the list now. Same legal classification as uranium, as rare earths, as lithium. That designation unlocks everything. Federal investment, fast-tracked mining permits, stockpiling authority, and yes, price support mechanisms, all justified under national security. Before I go further, I need you to hold something in your mind, because I'm going to come back to it later, and when I do, it's going to reframe every number I've given you. In 1996, 5 United States government agencies, including the Department of Defense, stopped publicly reporting how much silver the military uses. They reported it 1 year. The next year, nothing. 30 years of silence. No explanation. No FOI requests have ever produced those numbers. The data is classified. Remember that. Now, you already know the demand story. Solar panels need silver. Every panel uses about 20 grams. AI servers use 3 times more silver than traditional servers. Electric vehicles use between 25 and 50 grams per car, 5G infrastructure, medical devices, missile guidance systems. You've heard these numbers before, so I'm not going to repeat the basics. Instead, I'm going to show you the number that almost nobody talks about, but that explains everything. 820 million ounces. That's the cumulative global silver supply deficit over the last 5 years. 5 consecutive years where the world consumed more silver than miners produced. 820 million ounces short. To put that in perspective, global mine production is roughly 820 million ounces per year. So the deficit over 5 years equals 1 entire year of every silver mine on Earth running at full capacity. That's how much silver has been consumed and not replaced. And here's the kicker. 71% of all silver is mined as a byproduct of copper, lead, and zinc. It's not primary production. That means when the price of silver goes up, it doesn't bring a flood of new silver supply to market the way higher oil prices bring more drilling. You can't just turn on more silver mines. They don't exist. The silver comes out of the ground whether the price is $20 or $200 because the mines are there for the copper and zinc. The silver is just a bonus, so supply is inelastic. Demand is exploding, and the deficit is cumulative. Every year the shortage gets worse, not better. That's why Vance made his announcement, but there's a deeper, darker problem hiding under the surface. And almost nobody is paying attention to it because it sounds too insane to be real. 356 to 1. That's the current ratio of paper silver claims to actual physical silver backing those claims. You've probably heard about this before. The COMEX futures market, the London bullion market, SLV and other ETFs. There are vastly more paper contracts representing silver than there are actual bars of silver in the vaults to settle those contracts. That's not a conspiracy theory. That's how leverage works in commodity markets. It's legal, it's normal, until it's not. But let me ask you this. 12 months ago, silver was $31. If I had told you then that it would hit 120, would you have believed me? If I had told you the government would put silver on the critical minerals list, build a $12 billion stockpile, and announce tariff-enforced price floors, would you have taken me seriously, or would you have closed this video and moved on? Every single one of those things happened. All of it in 12 months. So I don't ask whether $1,000 is crazy. I ask what would have to happen for it to become possible. Gold would need to hit 10,000, which Yardeni Research is already forecasting. The gold to silver ratio would need to compress to 10 to 1. Why right now the system functions? Because both sides think they can win. The people who are long silver, who own the futures contracts, believe the price is going up. The people who are short silver, who've sold contracts they don't have metal to back, believe they can either push the price down or roll their positions forward indefinitely and never actually deliver metal. That balance of belief is what keeps the whole paper market alive. But what happens to that balance when the United States government announces it will not allow the price to fall below a certain level? Think about it. If you're short silver, your entire trade thesis is that the price will go down. That's how you profit. You sell high, cover low. But if the government just told you it's going to use tariffs to prevent the price from falling below a floor, your downside is now capped, not by market forces, by policy. Your maximum gain as a short is the distance between today's price and the floor, but your maximum loss is unlimited because the price can still rise as high as supply and demand will push it. That is a catastrophically bad risk-reward ratio. And the people managing the concentrated short positions at the big banks know it. There are massive short positions on the COMEX right now, positions that have been rolled over for years, positions that certain banks use to manage the price every time it starts to get uncomfortable. Those positions just became dramatically riskier to hold, because now the shorts aren't just fighting the market, they're fighting the United States government. And last time I checked, betting against the full force of American trade policy is not a winning strategy. If those shorts start covering, if they start buying silver to close out their positions, that 356 to 1 ratio doesn't unwind slowly. It snaps. And there is not enough physical metal in the world to absorb that rush. COMEX registered silver inventories are down 70% since 2020. The London Bullion Market Association has lost roughly 40% of its silver stocks. Shanghai vaults are at their lowest levels since 2015. The metal is gone. It's been consumed in solar panels, in data centers, in weapon systems. It's been turned into products that will never be melted back down. The silver is not coming back. That's the real story behind the ratio. Not just that it's broken, but that the government just made it impossible to keep pretending it isn't. And then China decided to make everything worse. On January 1st, 2026, China imposed sweeping new restrictions on silver exports. Only 44 companies in the entire country now have licenses to export refined silver. Hundreds of smaller refiners that have supplied the global market for decades are now locked out. China controls 60 to 70% of the world's refined silver supply, and they just choked the flow. Chinese state media describe this move as upgrading silver from a common commodity to a strategic resource. Those are the exact words China used before it restricted rare earth exports in 2010. Same playbook, different metal, and it worked before. Rare earth prices exploded. Western supply chains panicked. China leveraged its monopoly for political concessions. They're doing it again with silver, and Elon Musk noticed. He posted on X, "This is not good. Silver is needed in many industrial processes." Even Musk, who's usually 10 steps ahead of everyone, sounded concerned. Now here's what I want you to see. The 30-country trading bloc that Vance announced isn't just about price floors. It's a direct counter-move to China's export restrictions. And the countries joining this bloc tell you everything you need to know about where this is going. Think about where silver actually comes from. Mexico is the world's #1 silver producer. Peru is #2, then Chile, Australia, Poland, and the United States. Those are the top 6. Now think about which countries would eagerly join an American-led trading bloc that guarantees higher prices for the metals they mine. Every single one of those countries. Mexico and the U.S. just renegotiated USMCA. Peru has been strengthening trade ties with Washington. Australia is a core ally. If those countries join the bloc, and Burgum says 30 nations have already expressed interest, that means the majority of the world's mined silver would be inside a system with guaranteed minimum prices. China would be on the outside, looking in, facing tariffs on anything it tries to export. So China locks up refined silver, America locks up mine supply. Both sides are trying to control the choke points in the silver supply chain. Neither side is backing down. This isn't a trade dispute. This is a resource war, and your silver stack is sitting right in the middle of it. On February 2nd, 2 days before Vance's speech, the White House launched something called Project Vault, and this deserves way more attention than it's getting because almost nobody understands what it actually means. Project Vault is a $12 billion critical mineral stockpile. $10 billion comes from the Export-Import Bank, the largest single loan in that institution's 90-year history. Another $1.67 billion comes from private companies, 15-year term, and the list of participants reads like a Fortune 500 directory. General Motors, Boeing, Stellantis, Corning, GE Vernova, and Google. Commodity trading giants like Hartree Partners, Trafigura, and Mercuria are handling the physical logistics. Now ask yourself a question. Why is Google in a critical mineral stockpile? Google doesn't make cars. Google doesn't build fighter jets. Google builds data centers. And every AI server in those data centers uses about 3 times more silver than a traditional server. Google isn't joining Project Vault because it cares about mining policy. It's joining because it's terrified of not having enough silver to build the infrastructure it needs for AI. When the biggest tech company on the planet starts stockpiling industrial metals alongside defense contractors, that should tell you something the stock market hasn't priced in yet. And the structure of Project Vault matters. The manufacturers who join the program get guaranteed access to critical minerals at set prices. Read that again, set prices. That's a price floor embedded inside a government-backed stockpile. This isn't a paper contract. This isn't a promise. This is the United States government buying physical metal, storing it in secure facilities, and guaranteeing that American companies can access it at a predictable cost. If the market price spikes to $200, they're protected. If China cuts off supply completely, they're protected. This is economic warfare infrastructure, and it was built in weeks, not years. Now let's talk about what silver has actually done in the last 12 months, because the price action alone tells you this isn't normal. Silver started January 2025 at $31 an ounce. By January 2026, it hit an all-time high of $120. That's nearly a 4 times return in 12 months. Then on January 31st, it crashed 27% in a single trading session. The worst one-day collapse since the Hunt brothers tried to corner the silver market in 1980. People lost fortunes. Leverage positions got liquidated. Margin calls wiped out accounts. It was brutal. But here's what happened next. Within 4 days, silver bounced back to $90. It's sitting at $90 as I record this. Think about that. A 190% gain in 12 months, even after the worst crash in 46 years. What kind of asset does that? What kind of market gets cut almost in half and stands back up in 4 days? An asset the world cannot function without. The biggest banks on Wall Street are at war over what happens next. Citigroup says $150 within 3 months. Goldman Sachs is calling for 85 to 100 as the 2026 average. On the other side, JP Morgan's Kalanovich is calling it a speculative mania and predicting a collapse to 50. Bank of America ranked silver #1 for bubble-like dynamics, ahead of Bitcoin, ahead of Nvidia, ahead of every other asset on Earth. So who's right? Here's what I honestly think. Both sides are partially correct. The speculative frenzy that took silver to 120 was real. That was driven by leverage, by momentum traders, by people who had no idea what they were buying. That crash proved that leverage kills. Anyone who says silver only goes up is lying. But the deficit is real. The China restrictions are real. The critical mineral designation is real. The $12 billion stockpile is real. And the price floor announced 3 days ago is real. Those aren't speculative. Those are facts. And facts don't crash 27% in a day and disappear. So let's talk about the number in the title. $1,000. I owe you honesty, not hype. Silver is at $90 right now. 1,000 would be 11 times higher from here. The gold to silver ratio at that price, assuming gold is somewhere around 5,000, would be 5 to 1. That ratio has never existed in modern monetary history. The historical average is somewhere between 50 and 70 to 1. So I'm not going to sit here and tell you $1,000 silver is coming next week or next month. That would be dishonest. TH is still wider than historical norms during monetary crises, or we'd need a currency crisis, which is exactly what central banks buying gold at record pace are preparing for. The 1980 silver peak of $50, adjusted for real inflation using shadow stats methodology, is somewhere between $150 and $1,400 today, depending on whose numbers you trust. At $90, silver is still historically cheap relative to how much currency has been created. $1,000 isn't a 2026 event. But this decade, if gold hits 10,000, if the deficit continues, if the ratio compresses, 300 to 500 becomes a very real conversation. And from there, the psychological gap to 1,000 shrinks fast. But here's what matters more than any price target. A price floor changes the fundamental nature of an investment. Think about what silver was before February 4th. Unlimited downside. China could dump supply. Specs could short it into oblivion. A single Fed official could crash it 30% with one hawkish comment. You felt that last week. Now think about what silver became on February 4th. The government intends to put a floor under this metal. If the price drops too far, tariffs kick in. If China floods the market, the trading bloc absorbs it. If a mine can't turn a profit, the stockpile creates guaranteed demand. This doesn't eliminate volatility. Silver can still have violent swings, but it creates a structural backstop that has never existed before in the entire history of this metal. Your downside is being limited by policy. Your upside is being driven by physics, by the fact that solar panels need silver and nobody's invented a substitute, by the fact that AI infrastructure needs silver and demand is doubling every 18 months, by the fact that the military needs silver and they're not going to stop building weapons. Your downside is policy. Your upside is physics. That is the most asymmetric setup silver has ever had. And now I need to come back to the thing I told you to remember at the beginning. In 1996, 5 United States government agencies, including the Department of Defense, stopped reporting how much silver the military consumes. 1 year, they published the data. The next year, silence. That silence has lasted 30 years. The Silver Institute, which publishes the most comprehensive supply and demand data in the world, does not include military applications in its reports. Not missiles, not satellites, not radar systems, not naval electronics, not guidance systems. Nothing. The 820 million ounce deficit I showed you earlier, that's civilian demand. It doesn't include a single ounce consumed by the largest, most technologically advanced military on Earth. Let me put that in perspective. The United States has launched over 2,300 Tomahawk cruise missiles since 1991. Every single one contains silver. Estimates range from 15 to 500 ounces per missile, depending on the model. Every ounce was vaporized on impact, never recovered, never recycled, never counted in the official deficit. And Tomahawks are just one weapon system. Think about the entire Navy, every Aegis destroyer, every Virginia-class submarine, every F-35 fighter jet, silver in the radar, silver in the avionics, silver in the communications, none of it counted. The real deficit could be twice as large as the official number, maybe more. And the government that classified that data 30 years ago is the same government that just told you silver is critical to national security and announced price floors. They know the real number. They're not sharing it. Draw your own conclusions. So where does this leave us? Let me lay out the facts with no speculation. Fact: 5 consecutive years of supply deficit totaling 820 million ounces, and that's only civilian demand. Fact: China controls 60 to 70% of refined silver and locked exports 5 weeks ago. Fact: Silver was designated a critical mineral for the first time in history. Fact: Section 232 Declaration, National Security Threat. Fact: Project Vault, $12 billion, Google and Boeing stockpiling physical metal. Fact: 3 days ago, the Vice President announced tariff-enforced price floors to 50 nations. Fact: The concentrated shorts on COMEX are now fighting U.S. government policy. Fact: Nobody knows how much silver the military actually uses because the data has been classified for 30 years. These are not opinions. These are documented, verifiable events, and every single one points in the same direction. Is $1,000 silver guaranteed? No. Is it mathematically possible within this decade? Yes. Is the direction clear? In my opinion, it has never been clearer. The United States government does not build $12 billion stockpiles for metals it thinks are going down in value. It does not assemble 30-nation trading blocks for commodities it thinks are overpriced. It does not classify metals as threats to national security because supply is abundant. They are telling you right now, today, on camera, what they believe about silver. The only question is whether you're listening. Now I want to speak directly to the people who think this is hype. You're going to show up in the comments and say this is fear-mongering, silver is in a bubble, JP Morgan is right, it's going to 50. You might be right about the short term. I'm not denying that possibility. Silver crashed 27% in one day last week. It can happen again. If you're using leverage, you can get destroyed. I am not telling you to mortgage your house and buy silver. That would be insane, and I would never recommend it. But answer one question. If silver is just hype, why is the United States government building a $12 billion stockpile of it? If it's a bubble, why did the Vice President announce price floors in front of 50 countries 3 days ago? If it's overpriced, Why is China treating it like a strategic resource and restricting exports? If it's a mania, why are Google and Boeing racing to lock up multi-year supply agreements? Bubbles don't get Section 232 national security designations. Bubbles don't get price floors. Bubbles don't trigger $12 billion stockpiles with 15-year financing terms. Whatever silver is right now, it's not a bubble. It's a battlefield. And the two most powerful countries on Earth just told you what they're willing to fight over. In my next video, I'm going to break down the exact reference price levels being discussed behind closed doors. Vance gave us the mechanism, but he didn't give us the numbers. I've been tracking the deals this administration has already made with rare earth companies and lithium producers. Those contracts have specific price guarantees written into them. When you see those numbers, it's going to completely change how you think about every ounce of silver you own. Subscribe right now so you don't miss it. And drop a comment below. What do you think the floor price for silver should be? 70? 100? Higher? I read every single comment and I'll respond to as many as I can. Share this video. This is breaking news from 3 days ago and most people still have no idea it happened. By the time the mainstream financial media figures out what Vance actually announced, the smart money will have already positioned itself. Don't be late to something this big. I'll see you in the next one.